TCS reporting numbers on the 9th. But on that note, let me bring on board our guest for today. Joining me is Nilesh Jain, who's from Centrum Broking. Nilesh, great to have you on the show. Key levels being broken, right? 20 DMA, 50 DMA, you have 200 DMA levels being broken on the Nifty and Nifty Bank indices as well. 23,460, that's the December low. Do you see a risk of that level being tested on the Nifty and 43,700 or thereabouts? Would you be working with that as a floor for the Nifty Bank Index?
Very good morning to you, Nanta. Well, yesterday was a kind of carnage that we saw. Nifty also breached its important and a crucial support of its 200-day moving average that was placed at 20,900, which will now indeed will act as immediate resistance. And you have rightly pointed out the important support now for the Nifty, which is currently placed at 23,460. That was the low that we saw in the December month, and it looks like Nifty is likely to revisit those levels going forward. Today, GIFT Nifty was indicating a kind of a positive opening. We may see a positive start, but there are high possibility of a supply coming in at the high levels. So it looks like the index is not out of the woods yet. We may see another round of selling going forward, although there could be possibility of some pullback, which may take Nifty towards 23,800 to 23,900. But I would be waiting for Nifty to close above 23,900 mark for any sort of possibility of a positive trend reversal. But as of now, it looks like the range for the Nifty 23,400 to 23,900. On the other hand, Bank Nifty, which broke after a long time, it broke its 200-day moving average. And the multi-month support now for the Bank Nifty in the spot level is placed at 49,600. So till the time Bank Nifty doesn't break below 49,600, there could be possibility of a pullback, which may take Bank Nifty towards 50,400 to 50,800. So a pullback can be played with a strict stop loss below 49,600.
Okay, that's the level to watch out for on the Nifty Bank Index, 49,600 on the downside. But what would you do with the likes of an HDFC Bank and a Kotak Bank? Both the banks were in the news. HDFC Bank, of course, reporting its third quarter business update, and Kotak Mahindra Bank, there was an exit. Banks, of course, as you mentioned, haven't really been doing all that well, but particularly for Union Bank as well, that stock was down 8%. Among these counters, would you keep any of these on your radar? Do you think it's a good time to get into some of these counters, at least for the next 3 to 4 month kind of a perspective?
Sinanta, HDFC Bank has been one of the outperformer, which led from the front, and after hitting a new record high near about 1860, 1870, we have seen some amount of profit taking. I think this the correction that we have witnessed in last couple of weeks now, that is likely to extend further. So one should not be in a hurry to take any contraband at current level in these heavyweights. There could be possibility of some time-wise correction, some prices correction as well. But if somebody is looking from a positional point of view, these are good levels to buy in a staggered manner. And from a trading point of view, I think there could be possibility of another leg towards 1680 to 1670. And the major support for the HDFC Bank is placed at 1600. So overall, yesterday the PSU banks as well witnessed one of the biggest decline in the recent times. So overall, PSU banks are looking weak on the chart. Any pullback might get sold into. So better to wait for some stability to come in if somebody is looking from a trading point of view. But yes, these are good levels to enter from a positional point of view. But one should keep in mind that there will be another leg on the lower side. So better to buy in a staggered manner.
Okay, that's the view on some of these banking names. Since we are speaking about this, a pointed query on Union Bank, I want to get it addressed by you. Maheshwar Bhanu wants to know, is it worth holding the counter, Union Bank, because he's bought 500 shares at the rate of 112 per share. He has a time horizon of 1 year. He wants to know at what level should he average, hold or exit. If you could help him navigate this holding.
Right, Nanta. So this stock has witnessed a good amount of consolidation. Recently, we have seen some profit taking as well. Multiple tops can be seen in the zone of 600 to 610. But this due to the recent correction, the stock is approaching towards its multi-month support zone of 480, 490. If somebody is looking from positional point of view, I think it's a good buy. If already holding the long position, then one can keep a trailing stop loss below 485 and stay put. From a positional point of view, there could be possibility of a rebound from here. Not advisable to exit at lowest level, although it is trading well below its all long-term and short-term moving averages. But purely from a positional point of view, I think one should stay put. There will be a rebound going forward, and which may take this particular counter towards 600 plus.
Okay, I hope that answers your query on Union Bank. But another stock that will be in focus, today is BPCL. In fact, even IGL will be in focus, and so will be GAIL, given the fact that the BPCL has approved the 1,000 crore rupee IPO of the JV firm Maharashtra Natural Gas. Now, of course, this is a JV between BPCL, GAIL, and IGL. And on the back of that, we have a note also coming in on IGL from Citi. They have a buy call on the stock. Target price is at 450 rupees. Of course, the board of BPCL has granted approval for the listing of Maharashtra Natural Gas. Aside of that, if you look at what Citi has to say on IGL, it says that it will lead to value unlocking for shareholders, and of course, the target price is at 450 rupees per share. But in the wake of rising crude prices, we've seen the likes of BPCL, HPCL, and IOC come under a fair bit of pressure. How do you navigate some of these OMCs and upstream gas companies now? We'll come to that. The markets have opened up, and as we are getting the first ticks, we have kind of seen a good rebound from yesterday's panic-driven sell-off. So it is a 100-point or 120-point kind of a recovery on the Nifty. We are back above that 23,740 mark. If you look at the Sensex, that's also recovered a good 350-point. Early days to say whether this up move will sustain or not, but the mid cap index also moving in tandem with benchmarks, a 0.7% kind of gain coming in there as well. The bank Nifty also for now has edged back above that 50,200 level. So a heave of investors rather will heave a sigh of relief, after the kind of carnage we saw on the street yesterday. Let's take a look at some of the other sectors. It should be a broad-based recovery today, given the fact that the sell-off was quite brutal, which took all the sectors down with it. Today, all the sectors, as I mentioned, yes, are trading in the green. The India VIX has also cooled off, 3.5% down on that one. It is sustaining above that 15 level. But in terms of some of the sectors that are doing particularly well today, energy, the Nifty energy basket is doing well. It's up over 1%. You have pharma doing well, 0.5% gains there. The Nifty PSU bank is up 1% or so. You remember yesterday it was down 4% or thereabouts. Realty pack is up 0.7%. Autos, banks, all of them are in the green. IT as well, up almost 1%. Remember, TCS reports its numbers on the 9th and officially kicks off the earnings season as well. In terms of individual movers on the index, let's see which stocks are taking the lead. ONGC, that's the top Nifty gainer. There was a bullish brokerage report as well on this particular counter. We'll talk about that as well. BPCL is a close second, 2% gains coming in there. Tata Consumer, that was an outlier yesterday, extending its gain today as well, 2% up on that stock. Titan also reported good third quarter business update yesterday, and it was among the few gainers in yesterday's session. Today as well, it's extending its gains. Shriram Finance, HDFC Life, Coal India, HCL Tech, IndusInd Bank, Nestle, these are some of the other movers. So FMCG names also among the top Nifty gainers as we speak. On the flip side, just a few losers on the index, which is heartening to see. M&M, Apollo Hospital, Bajaj Auto, Tata Motors and Hero MotoCorp. These are some of the laggards. Okay, now as we speak, it's a 150-point bump up on the index, 23,760 or thereabouts. Nilesh, 23,750 back on the charts. How are you, looking at this, and would you expect this up move to sustain, or do you think, by midday it will fizzle out, as has been the case in the last few sessions?
Right, Nanta. So yesterday we saw some amount of overreaction, and today we are witnessing a kind of a relief rally. And there are still some more room left for the Nifty index on the upside. So we may see some pullback towards 20,850 to 23,900. As mentioned, that 200 DMA, which is placed at 23,900, that is very important to break for the Nifty and close above the same. And from here, we expect this pullback to continue. But I won't be surprised towards the closing hour or maybe in the second half, we may see some profit taking from the high levels as well. So these are not a clear-cut directional move that we are witnessing in the market. We are witnessing extreme volatility that we have seen in last couple of weeks. So similar kind of move we may see going forward. So one has to be very careful taking aggressive long position at current level, given the kind of a gap up opening that we have seen. There could be possibility of some profit taking at the high levels.
Okay, that's the view on the markets and where they are headed after a positive open this morning. Info Edge, that's another stock that's on the focus list today. Third quarter updates came in. Standalone billings are up somewhere around 16% or thereabouts on a YY basis. But the stock hasn't been or hasn't really reacted very positively to this. The stock is down 3%. As we speak, in the last 5 sessions as well, today's move has taken the return on the stock in the negative territory. In the last 1 month as well, the stock hasn't really been doing a lot, right? 8,600 is where it's at the current juncture. What are the charts signaling on this one? Because in the last 6 months, we've seen a good 25% up move on this one.
Right, so the stock has been in an uptrend, and from past 2 sessions, we have seen some profit taking, but I don't think so that the trend has turned negative now. These are merely a profit taking that we are witnessing. I think it's a good opportunity to start accumulating the stock on declines. The stock has a very good support near about 83.50, so ideally that should be the stop loss. Any dip from here could be a good opportunity to initiate a long position, and we may see going forward a rebound towards 8,800 to 9,000 as well.
Okay, trend remains intact on an info edge. Let's talk about some of these oil and gas names because they are in favor today. Even the OMCs are in favor. Crude has cooled off a bit, but of course there is this IPO news that I was talking about right before the market opened. So you have IGL, BPCL, GAIL, all of these in focus on the back of approval for that 1,000 crore rupee IPO. Aside of that, you also have CLSA that has upgraded ONGC to high conviction outperform, and the target price is at 360 rupees. Chartically, how are the OMCs looking after the recent spate of correction? And ONGC, it's somewhere around 260 right now. Do you see a 300 kind of levels on the upside anytime soon?
So ONGC specifically, this particular counter has been on our radar as well because the stock is making an attempt to surpass its 200 exponential moving average. And today, in fact, it is, if at all it closes above the same, then there could be possibility of a bottoming out in this particular counter. So look strong on the chart. We are preempting that going forward, this counter will sustain above its 200-day exponential moving average, which is placed at 260. And on the upside, the target that we are expecting this particular counter is 275 to 280. One can keep a stop loss below 250. That's the 50-day moving average for this particular counter. So it's a buy and can be added on declines as well for upside target of 275 to 285. On the other hand, OMC stocks are not looking that promising, although we are witnessing some pullback today. But there are multiple hurdles as far as BPCL is concerned. 300 is the immediate resistance till time it doesn't break above the same. We may see this amount of consolidation to continue. And given the kind of structure that we are witnessing in crude oil, Brent crude specifically, which is trading somewhere around 77. So if Brent crude breaks above 78, then it will be considered as a breakout, a structural breakout. And post then the target on Brent crude would come somewhere around 82 to 85. That would be a negative for all the OMC stock. So this pullback can be traded purely from a trading point of view with a strict stop loss. So 280 should be the stop loss for the long position in the BPCL, and on the upside 300 could be the potential target, but don't see any major upside. And similar with the case with IGL as well. We have seen good momentum recently. Now, past 2 sessions, we are witnessing some profit taking. So it has a very good support at 410. So ideally, that should be the stop loss for the long position, and 450 could be seen on the chart.
All right, that was about the entire oil and gas space. But before we take up more queries, I want to get in your thoughts on an SH Kelkar. The stock is down and out today, 4% lower on that one on the back of the third quarter update. Although the demand has been pretty healthy across its key segments and core European markets have continued to deliver steady performance. The company has also said that it is on track to achieve double-digit growth for FY25, but it's the margin trajectory, that has taken a toll, because gross margins have been under pressure due to supply constraints for strategic raw materials. In fact, the margin pressure is likely to persist until the fourth quarter of the current fiscal, and they are only expected to normalize post Q4 FY25, which is what the stock is reacting to. And if you look at the stock, it has been stuck in a downtrend, right? Last 1 month, if you see the last 3-month returns as well, it has been fairly negative. Do you expect this weakness to continue on the charts, or do you expect the stock to approach those oversold zones, or the oversold zone anytime soon, and post which it can see some bit of a revival?
Well, Nita, if you just pull up its historical chart post listing, and if you see on 2000 in the year 2017, the stock made a high of 335 to 340, and similar highs that we have seen recently in the month of October. It looks like a kind of a double top formation on the monthly time frame chart that is considered as a negative formation. The structure is also looking weak. Continuously, it is forming a low top and overtop formation from past couple of weeks now. So structure wise, it is trading in a falling channel. The structure looks weak and it may test the levels of 230, 220 levels on the lower side. So on the upside, 260 is the immediate hurdle, and we expect some amount of selling pressure to continue. So it's an avoid taking any contraband at current level.
Okay, SH Kelkar, and avoid at the current juncture. I want to get in your thoughts on some of these diagnostic shares as well. After yesterday's, scare, we saw a spurt in stocks like Thyrocare, which was up somewhere around 11% or so yesterday. But today, of course, it is down 5%. Fair bit of profit taking in this counter. But hospitals and some of these diagnostic stocks, any of them, worth looking at right now? At least you have stocks like Vijaya Diagnostics, Thyrocare, as I mentioned, Metropolis Health. Any of these stocks looking good, attractive on charts now?
So Nita, yesterday we saw a news-based impact in all the diagnostic stock, and today we are witnessing once again sort of a profit taking. But if we look at the overall structure in couple of stocks within this space, one of them you have just mentioned about Vijaya. So Vijaya Diagnostic, this particular stock is looking very attractive. And if you just pull up weekly chart of past 1 year, the stock has been in an uptrend. Recent correction has given a good opportunity to start accumulating this particular stock. On the upside, the target comes around 1250. A breakout about 1250 will open further upside towards 1400 to 1500. So with a stop loss below 1100, buy and decline should be the strategy in Vijaya. Apart from that, within hospital space, Apollo Hospital particularly, this stock is also looking attractive. Given the kind of formation that we can see on the weekly time frame chart, the stock has been in an uptrend. So any dip can be used as a buying opportunity, keeping stop loss below 7150, and target on the upside comes around 7600 to 8000.
All right, that's the view on some of these hospital stocks as well as diagnostic stocks as well. But let's take up some viewer queries on that note. I want to take up this query on Titan that has come in from Anant Swaminath. He wants to know your views on Titan for daily trade as well as short term. The stock has been on an up move yesterday as well in a weak market. Kind of emerged as among the top Nifty gainers. Today as well, it's shining bright, almost a 3% kind of gain coming in, and the last 5 sessions, the stock has gained almost 10%. For the short term, for the very short term, what is the kind of resistance level to watch out for in this particular counter?
So Titan is a buy. In fact, I wanted to cover as a recommendation as well. So good formation can be seen. The stock broke out today with a good volume so far. So structure-wise, it's looking positive for upside target of 3650 to 3700. And if already holding the long position, then one can keep a trailing stop loss somewhere around 3450. So yes, it's a buy on decline, buy at current level as well. Keep a stop loss below 3450. Target would be 3650 to 3700.
Okay, that's the level to watch out for on Titan. Hope that answers your query. Couple of queries coming in on Bajaj Finance and Bajaj Housing as well. The query from Bajaj Finance has come in from Hemant. He I think he's making a gain of 7% on his holding, and he wants to know if he should book profit or wait it out. And the second query is on Bajaj Housing, that's coming in from Geetu Sandesh. Wants to know whether it should be held or sold. Bajaj Finance stock reacted very positively to its third quarter updates. Do you think it makes sense to hold on right now, perhaps wait for further upside before taking profits? And for Bajaj Housing, what should one do?
So out of these two, Bajaj Finance, in fact, is looking very attractive, very strong on the chart. Even if you see Bajaj Twins, the other stock, Bajaj Finserv. So in fact, these two particular stocks are looking positive. Both are trading in line with each other. So we can expect a follow-up move in Bajaj Finance towards 7,600 to 7,800, and support is placed somewhere around 7,100. So with a stop loss below 7,100, one can stay put in Bajaj Finance. Looks positive. On the other hand, Bajaj Housing Finance, this particular stock, post listing, we have seen a continuation of a downtick, and this downtrend has extended further. So structure is looking negative, and we may see further downtrend towards 116 to 114 as well. So till the time it doesn't surpasses above 130, it's an avoid taking any contra bet. If it breaks above 130, then there could be possibility of a short-term base formation. But as of now, it's an avoid from my side.
All right, that's the view on the Bajaj Twins, but let's also talk about Zomato. We have a query coming in from Nanda Reddy on this particular stock. Wants to know whether one should average or how should one approach today. There was a brokerage note as well on Zomato. Jefferies has downgraded the stock to hold, and the target price has been cut to 275 rupees from 335 rupees a share. Jefferies has pointed out that valuations are not expensive at the current juncture, but of course, the rise in competition in the quick commerce space is rather worrying, and they have cut the EBITDA forecast for Blinkit quite sharply. Just want to see how the shares of Zomato are reacting at the current juncture. Down 4%. And last 5 sessions, we have seen the stock shave off almost 9% or so. In the last 1 month as well, the stock has come under some bit of pressure. 250 is where it's at. If somebody is making a loss here, should they get out, or what should they do?
It's not advisable to exit at current level, given the kind of a fall that we have seen in last 3 sessions. If we need to look at the broader structure. So the broader structure looks positive. The stock has a very strong support of a double bottom at 240. So I would wait till 240 is taken off on the lower side. So ideally, that should be the stop loss for the long position, and it's an hold. One can stay put, keeping a stop loss below the same. We may see a pullback towards 270, 280. Post then one may once again review this particular counter, but it's a buy and decline till the time it doesn't break below 240.
All right, buy on decline. That's the kind of strategy one should adopt on a Zomato right now. But with that, I'm afraid we are running out of time. So we've come to the end of the query segment. But before I let you go, Nilesh, what would you be recommending for our viewers this morning?
So we have buy recommendation. First of all, Godrej Consumer Product. This particular stock, we have, as a disclaimer, we have already given to our client as well yesterday. So we are expecting a follow-up move to continue towards 1200 to 1220. So it can be bought at current level, keeping a stop loss below 1135. Godrej Consumer Product is looking positive. Apart from that, we already spoke about Titan. Titan is already there in our recommendation list as well. So we are expecting a follow-up move towards 3650 to 3700 with a stop loss below 3450. Titan can also be bought.
Okay, that's the view then. Titan as well as Godrej Consumer, these are the recommendations coming in from Nilesh. Nilesh, with that, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Always look forward to our interactions and look forward to more in the future.
Thank you, Nandita.
Thank you. On that note, let's take a look at the markets.